Well, the big news for New Zealand financial markets on Thursday morning was, of course, the Reserve Bank of New Zealand's announcement on the official cash rate. Now, as expected by most, the official cash rate remains unchanged at 2.5%. But most people were picking that we would see a lift over the next few months, so we've been watching the comments from the Reserve Bank Governor pretty closely. And this is what he effectively said. International funding conditions out of Europe and the turmoil we have been seeing overseas has meant we've seen some conditions tighten up, and this may mean that bank funding costs back here in New Zealand may lift over the next few months. The other big issue facing New Zealand at the moment is the very, very high New Zealand dollar, and this may contain economic growth out of this part of the world over the next few months. So there's no need to increase the official cash rate just yet, but we may start to see some lifts later on this year or early into next year. So interest rates on a short-term basis should stay low over the next few months, but assuming that we do start to see things settle down out of Europe, we may start to see some lifts early into next year. Well, one of the comments from the Reserve Bank Governor today was about the New Zealand dollar, and there have been a few changes in terms of dynamics around the world and what effect this may have on our own New Zealand dollar over the next few months. Two factors mainly being that interest rates in this part of the world are likely to stay a little bit lower for longer, so this means that New Zealand may not be quite as attractive to international investors as what they previously were. The other factor is that our economy has slowed down just a little bit recently. Housing market activity has slowed down, and we're also likely to see some evidence in terms of our GDP numbers out next week that the New Zealand economy has slowed down and probably only it's going through a bit of a soft patch just at the moment. So these two factors is likely to mean that international investors won't be quite as attracted to the New Zealand economy as previously, and it's also likely to mean that the New Zealand dollar may come under a little bit more pressure over the next few months. So we're still picking the Kiwi to rise against the US on a medium-term basis, but over the next few months we may even drop below 80 cents, which may be positive for local farmers over the next couple of months.